At People's Capital Group, we help you invest in real estate. Build your wealth by owning professionally managed apartment buildings in the northern New Jersey market. We want to show you how owning real estate is attainable, even for the busy professionals that don't have the time or experience investing in real estate. Now, we only work with select people who are serious about building wealth. So find out if you qualify at peoplescapitalgroup.com. Hello, ladies and gentlemen. Welcome to another episode of the Passive Cash Flow Podcast. I'm your host, Aaron Fragnito, and today our topic is investing in apartment complexes. The Passive Cash Flow Podcast explains in-depth topics of how we help people invest passively in high-demand real estate and why over the last decade, dozens of people have decided to invest passively with People's Capital Group. Some episodes include interesting guests that span dozens of different types of industries. Other episodes offer analysis of popular topics that pertain to people seeking to learn how to build passive wealth in real estate. So listen into our Enjoy the Off-the-Cuff podcast here, made to entertain, educate, and help you learn how to create passive wealth in real estate. To learn more, visit peoplescapitalgroup.com. That's our sponsor, People's Capital Group. And we're going to break right into our topic here today, investing in apartment complexes. So as you know, at People's Capital Group, we specialize in investing in apartment complexes. With my partner, Seth Martinez, we've built about a $20 million portfolio with the help of our passive investors and our group of private investors that participate in these investments and get all the benefits of it, which we'll break down today in this podcast. But first things first, so when investing in apartment complexes, first we decide how are you going to go about it. Are you going to work by yourself to invest in apartment complexes, or are you going to work with a syndicate, a group of professionals to invest in apartment complexes? And we'll break down the benefits of either one of those options and how both could be a reality, but also there's faster ways to get to success as well. But why apartment complexes, right? Why would I suggest investing in apartment complexes? Well, the number one rule that I like is everyone needs a roof over their head, right? So we don't always need a office space. We've seen that get hit pretty hard with this pandemic. We've seen retail space, storefronts get hit kind of hard with online shopping. But apartment buildings, well, it's really a necessity. It's a commodity and it's a necessity. Housing is one of the three things we need to survive, right? Food, water, shelter. So shelter's a pretty good bet as far as an investment. Now, of course, there are challenges to managing property management, which we'll break into in this podcast. But the bottom line is housing holds its demand, especially rental properties and high demand locations. See, we focus on buying apartment buildings within an hour of Manhattan, generally near a train station that allows you to commute to Manhattan in less than an hour. And we find that this North Jersey market has just such a hub of demand, a hub of populace, so many people living in one place that need a place to live, that the demand is strong through thick and thin, through recession, through good markets as well. So we see that with apartment buildings, with larger apartment buildings, we can sustain higher vacancy amounts, where something like an office building or retail storefronts and things like that cannot afford as many vacancies as an apartment building can, because apartment buildings produce stronger income generally than other types of real estate like office, retail, and even industrial. So therefore, apartment buildings also produce strong and stable cash flow. Now, other areas of the country produce a little bit better cash flow than high demand markets such as North Jersey, but even buying in North Jersey, our properties still produce cash flow once they're renovated and up and running properly. So cash flow is a great benefit of real estate investing. That's why a lot of people get into real estate investing. And of course, you can write off that cash flow with tax depreciation, which we'll break into a little bit in a second here. So the benefits of real estate are wealth, equity growth, which creates wealth, but also strong, stable cash flow. And of course, property management, right? Having more units under one roof, owning apartment complexes, or just having more buildings under one roof allows for scalable property management and economies of scale. So by having property management companies with bigger properties and being able to manage them a little bit easier, it keeps our costs a bit lower, and it helps us manage the building more effectively so that we produce that wealth growth, we produce that cash flow, we get those tax benefits from the property so that our passive investors experience all the benefits of real estate without having to do the work. And when we renovate those units and we do our job properly, this creates forced property appreciation. So forced appreciation means that we're forcing the value of the building up. We're not hoping the market goes up and riding the wave. I mean, the property values have gone up very nicely over the last 6-7 years. It's been great for us landlords, but we're not just hoping the market goes up. You know, we do obviously invest in high demand locations where the market does grow, and we see that projection of growth happening and sustainably happening for the future. But, you know, you want to buy in the right location, but at the end of the day, having a property where you have value add to it, where there's things you can do to the property to create more value, to force the value up, that's called forced property appreciation. And ideally, we can control that a lot more than macroeconomic forces. And that's why we look for value add apartment buildings where rents are below market value. Renovations need to be completed to the property. We're not talking about a total gut renovation or knocking it down and building it again, just general cosmetic renovations and upgrades to the property and the units to allow them to be rented out for a higher price and therefore improve the value of the building, improve the net operating income, and force property appreciation into the property, more so controlling the property value and allowing our investors to make stronger returns faster. So that's called forced property appreciation, and that's a huge benefit of real estate in general, but especially apartment buildings as you renovate those units and lease them out for top dollar. Therefore, you're forcing the value up on the building and controlling the value more so. And of course, one of the final benefits of owning real estate and investing in apartment complexes is tax advantages. You can front load your tax depreciation. We have other podcasts about that. I just did one that focuses on cost segregation studies where you can front load your tax depreciation and take a bunch of tax write-offs on the first year you buy a building. But there's tons of tax advantages to owning real estate. You have the 1031 tax deference where you can sell the building, trade into a bigger property. They say swap till you drop, as they say, continue to defer all taxes until you die and just build your portfolio in real estate exponentially. We have other podcasts about the 1031 tax deference and cost segregation studies, so you can check those out. But the tax benefits of real estate are phenomenal, and that's another reason to invest in apartment buildings. So how do you successfully invest in apartment buildings, right? Because it's not like just buying a mutual fund or a stock. It's a management intensive asset. It's an asset that you need to hire a management company to manage properly or invest with professionals like a real estate syndicate and team up with them as a passive investor. But let's first talk about doing it yourself, right? Because here in America, we love to do it ourselves. And quite frankly, you can own real estate yourself. You can buy a multifamily property, hire a management company, manage that management company, make sure they're doing their job right, leasing units for top dollar, managing contractors, keeping costs low, and managing the property so that rents are collected on time and that the building is not getting damaged too much by leasing up to the wrong tenants. So it's a very management intensive asset. And what I found was actually hiring management companies, I felt more like a number on a screen rather than like a valued customer or valued client who, in which the way we like to make our investors feel like a valued client, a long-term business relationship. Now, I'm not saying every management company out there is not worth their cost, but we found that to really take a mismanaged building where rents are below market value, renovations are needed throughout, maybe there's rowdy tenants or tenants that aren't being cooperative that you need to work with or bring to eviction court. There's a lot of challenges in buying a mismanaged building. It's essentially a business. You're buying a mismanaged business in a way, and we're turning that business around and we're making it a fruitful, well-run machine, a well-run business, a profitable building. That could take 2 or 3 years of renovations and improved management to get there. So doing it yourself, you have to work with the right management company. And we also found that even management companies are not really looking to do all the things it takes to reposition an apartment building. So we in turn develop our own management company that allows us to manage our buildings in-house, keep tight control of our assets. And it's a lot different when the people leasing and renovating your units are people that work for you. They're your staff, as opposed to a third-party company where you're really at the mercy of that company. So it's, in our case, we developed a big enough portfolio where it made sense for us to develop a management company. And not only does that allow us to keep better control of the assets and produce better value out of them, get the projects completed faster, release them at better prices, but also it allows us to charge a discounted property management fee so that we're not making any income on our side with the property management, but it allows us to really charge a discounted fee for a service that we'd have to pay for regardless, property management. And by owning the property management, we charge a discounted property management fee, and that allows for better returns for our investors and, of course, better control of the asset so that we know how the asset's performing, we know the challenges we're running up against, and we're getting those challenges fixed and solving those problems as quickly and as affordably as possible. And that's the whole business here in real estate, right? You could invest in Texas or the Carolinas. You can do storefronts or short-term leasing or long-term leasing, Airbnbs, right? There's tons of different ways to make money in real estate. But the bottom line is the operators you're working with, do they have a good management system in place? Do they either own their own management company or work very closely with a great management company that understands we're repositioning apartment complexes? Or are they working at the mercy of a third-party management company and switching them from time to time, always at the mercy of a third-party company? You don't want to be there as a property owner. You want to be in control of your assets and making sure those assets hit those targets that you told your investors you'd get. And that brings me to my third way of owning apartment complexes, and that's become a syndicator. Right? Do what we do here at People's Capital Group. Now, the grass is always greener on the other side. I talk to people all the time and say, listen, I like the idea of investing passively and not having to do any of the work or personally guarantee the mortgage or look at a bunch of bad deals to find a good one. But I really have aspirations to be a real estate syndicator. I want to be like Grant Cardone and fly around on fancy jets and drive supercars and be a millionaire and people invest in me. And it's a really fancy schmancy business. It is. I mean, honestly, I try not to get too caught up in that side of the business, the flashy wealth. I'm really not one to flash wealth like that. I think it's a little cheap, honestly, and shallow. But what I like to do is focus on creating a quality experience for my investors. Everything from the conversation we have about the building, really explaining what we do and why people invest with us. Talking about maybe self-directing their IRA or solo 401k and connecting them with someone who can help them do that effectively, or taking an individual who's very heavily invested in the stock market and helping them really properly diversify an actual high-demand brick-and-mortar real estate that's professionally managed and produces wealth growth, cash flow, and tax benefits, where normally they might be invested in the stock market, maybe in a stock backed by real estate that doesn't quite get all those benefits. And actually helping them diversify into real estate successfully is really where I love the most of my job. So I get great pride in helping people build their wealth. I'm about to refinance a building with an investor and get him about a 16% cash-on-cash return on his investment. I told him I'd get him about a 10% annualized cash-on-cash return on his investment when he invested in us 3 years ago. And now we're looking at getting about 60% greater returns than we targeted, than we projected, than we told him we would get. So obviously a very happy investor, a very good project, but that makes me so happy to give this gentleman that check for 60% more than I told him I would 3 years ago. That's a great feeling for him. That's a great feeling for me. And that's why I love what I do. But make no mistake about it, it's taken years to get here. Seth and I have done over 250 transactions together. We've bought and sold apartment buildings. We've refinanced buildings. We've fixed and flipped houses. We've wholesaled properties. We made our mistakes along the way. We've hired the wrong contractors. We've hired the wrong property management company. We've teamed up with the wrong investors. We've made all the mistakes along the way and we've learned from them, and we've developed a good company and an in-house management company because of that. And now, because of the way we've learned through the years, through our experience, we save other investors from having those experiences and learning the hard way. They can learn the easy way with People's Capital Group, be safely invested, earning and learning at the same time. So if you have aspirations to become a syndicator, that's great. There's a lot of people out there that do very well with it. It's not a bad way to put food on your plate, but it takes years to get there to become a successful syndicator, and getting started is extremely difficult. So what I suggest to a lot of people who want to become a syndicator is invest as a limited partner, as a passive investor in a syndicate that you like and trust and you want to follow, and check out all the monthly updates. Hopefully they give you monthly updates like we do at People's Capital Group. Hopefully they give you quarterly financials. Hopefully they put out weekly podcasts like we do, and blog posts and monthly webinars, so you can digest all this information as an investor with them, learn from what they're doing, earn as well. And then if you still want to become a syndicator, learn from them and start your own business. But the best way to get started in that space is to team up as a limited partner, as a passive investor first, and learn from those operators. That's what I always suggest. So here's another question I often get. How much can I make investing in apartment buildings? So investing in apartment buildings, obviously a very wide range of returns. I've seen people do extremely well, like our passive investor who's earning a 16% plus annualized cash on cash return. And that's not really normal. That's a really strong return. So we do want to toot our horns there, but also recognize it's more common to get around a 10 to 11% cash on cash return when annualized when investing in apartment buildings. So generally, people can expect to make around that type of cash on cash return when investing in apartment buildings, about a 10 to 12% cash on cash return when annualized. And with People's Capital Group, that's experienced between cash flow, but primarily a refinance, which is a liquidity event where investors can experience about half of their investment back. And we try to achieve that between years 3 to 5. And that allows investors to make about a 10 to 12% cash on cash return on their investment with People's Capital Group here. It's a combination of a little bit of cash flow, but primarily refinance capital. That's the main earner for our investors. And that's how it's done here with High Demand Real Estate in North Jersey. But in general, what I've seen out there in this space are cash and cash returns between 10 to 12%, maybe up to 15. Be careful. People are promising too big of numbers. I've seen internalized rates of return up to 20%. We've achieved even greater than that. Internalized rate of returns are the returns taking into account your tax depreciation as well, right? So it's your cash on cash return plus your tax benefits. So that added up is your internal rate of return. And that can generally float around the 15 to 20% mark with apartment buildings. So you want to focus on the tax benefits of real estate and the cash flow and the wealth growth, but adding them all up is going to boost your returns up to the high teens generally with well-run real estate syndicates, well-run and managed apartment buildings. But here's some factors investors should consider before buying an apartment building. Right, you want to determine the type of apartment building. There's high rises, there's garden style apartment buildings, there's inner city, there's more suburban areas. There's mismanaged value add apartment buildings, which we really prefer because we can force equity into them, as I explained earlier. But you want to find the right building for you and obviously for your budget as well. And the benefit of working with a syndicate or an operator, experienced professionals, is that they're looking at all different types of buildings. They've narrowed down what they work best with. We prefer mismanaged garden-style apartment buildings within an hour of Manhattan on the Jersey side. That's our recipe for success. That's what we're set up to manage properly and reposition properly. And that's our specialty. So you want to figure out what your specialty is and then try not to divulge too much from there and really narrow in, stay laser focused on the type of real estate you want to own and operate, because every type of real estate's different, and learning how to operate or manage a new type of real estate could be a whole new learning curve. And due diligence, right? So let's talk about due diligence for a second. Here at People's Capital Group, we have 3 levels of due diligence. We have our initial financial review and releases and things like that, and financial documents. Then we have our physical inspection of the property. This can also involve environmental inspections like tank scans, even soil tests, and hiring a property inspector to go through the entire property. And then we have our 3rd level due diligence, which is more so legal and title. That's going to be done generally by a title company and an attorney, maybe reviewing HOA laws or bylaws or information on title restrictions or things like that. And of course, reviewing any in-depth information from the seller also. So we have 3 levels of due diligence we complete on properties, and that allows us to really analyze each property and make sure it's a good investment for our investor group. It's a strong long-term investment for our management style, our goals, and our investors' goals. And it's going to achieve the targets we want to achieve for our investors, which are those double digits returns I touched on earlier. And if it checks off those boxes, then we go through our next levels of due diligence and ideally raise the capital, retain a mortgage, and close on the property, begin our renovations, and so it can produce cash flow, tax benefits, and wealth creation for our private investor group. So that's our goal here at People's Capital Group. We always focus on finding mismanaged apartment buildings in North Jersey for our private investor group to invest in. Investing in apartment complexes can be a great way to build wealth. It's allowed my business partner Seth Martinez and I to build a $20 million portfolio of apartment complexes throughout New Jersey and help over 50 people invest in those buildings and earn returns from them. So it's really a great asset class. I'm a huge fan of it, if you can't tell. We know a lot about it. We specialize in it. It's my bread and butter. It's certainly a great way to build wealth. It's tried and true. And of course, we all need a roof over our head. So if you want to learn more about investing in apartment complexes and teaming up with professionals, go to peoplescapitalgroup.com. Check out all the other information we have, different podcasts, blogs, webinars, and you can fill out a form to qualify to invest, or you can call our office as well. Once you fill out that form, we're going to get in touch with you. We're going to set up a call with a managing member of People's Capital Group and see if you are qualified to invest with us and if our goals align, your investment goals and our investment goals long term. And if they do, hopefully you can qualify to invest with People's Capital Group and get in on apartment complexes here in North Jersey. So that is our goal. We're always looking for those buildings. We're always looking for a great deal. So if you're a broker, get in touch with us as well. And if you're a passive investor, again, it all starts at peoplescapitalgroup.com, where you can learn more about investing in apartment complexes. But that's it for me today, ladies and gentlemen. Thank you very much for listening to the Passive Cash Flow Podcast, where we help people invest passively in real estate. And we've been doing this over 10 years, my business partner Seth and I. We've over 75 episodes on our website, peoplescapitalgroup.com, where you can learn more about passively investing in high demand real estate here in New Jersey. Have a good day.